What's going on, everybody, and welcome to the video. In this one, I just kind of want to talk to everybody about why you need to build a dividend portfolio, kind of how to do it correctly, all the different things that just kind of come into why I believe dividend stocks are such a good investment, maybe compared to growth stocks. Everybody has a different performance. And I'm not just trying to say only invest in dividend stocks, do what you want. I personally have a dividend portfolio. I have, kind of a passive portfolio that is just ETFs. I have a growth stock portfolio, which is a little bit more risky and different things like this. But I'm going to talk about why I think it's important that my dividend portfolio is my biggest portfolio right now. So I'm going to go into all this different stuff. But if you do enjoy this type of content, all you have to do is subscribe to the channel and you turn on post notifications so you miss out on any of my future content. But let's go ahead and kind of get straight into the video. So looking at it, here's kind of a look at inside my dividend portfolio. We got tech and cloud computing, income fund, banking and fintech, restaurants and food, consumer stores and real estate. Looking at my tech and cloud computing, I've got Apple, Microsoft, Broadcom, and then Nvidia in here. And then my income fund, just some ETFs kind of that to be there, some higher yield things like SPHD, XYLD, Schwab US Dividend Equity, SPYD, QYLD, and then JEPI is not even really in there. It's 65 cents worth of a holding. And then we go to banking and fintech. Been doing kind of well, kind of bad. We've got TD, JP Morgan, Charles Schwab, Visa, and then Morgan Stanley. And then restaurants and food, just Starbucks in here. One of my favorite stocks, to be completely honest, as of now. And then consumer and stores, we got Home Depot, Lowe's, and Costco. And then last we have real estate, which is just going to be realty income. But let's go ahead and kind of show you a little bit. If you are interested in getting access to a lot of spreadsheets I've created, different things like that, check out my Patreon, link in the description down below. Get access to all these different spreadsheets, portfolio tracker, different ways to kind of value a stock valuation spreadsheets, watch list, a ton of other things that go into it, how Warren Buffett, I know I'm going on, but this is kind of everything. Just looking at my dividend dashboard just to show you how dividends are pretty important. You get all the information like the time, all the dividends you've ever earned, monthly income, your yield versus your yield on cost, which is very important to keep track of, estimated dividend income that you're going to make per year, how much you've made, and then how much you made per month, things like that, your dividend portfolio, just kind of see how everything's performing, and then all that good stuff. But let's go ahead and kind of talk about why you're here, why you need to build a dividend stock portfolio and how. So let's kind of talk about why dividend stocks. Why would you invest in dividend stocks that, a lot of people seem to be boring, or things like this as compared to growth stocks where people are like, oh, I made 300%, or investing in crypto only, whatever it is. So dividend stocks, and we'll go into this a little bit in the video, historically are proven to make a large percent of total stock market returns. And then, dividend paying companies have performed far better than the market in the long term. Consistent passive income with dividend stocks, the dividend snowball effect, which is very, very important. And then it's a better hedge against market crashes and bear markets and even inflation and things like that. And it is very important to kind of be just like notice risk that's going to kind of come into your portfolio and things like that. But let's go ahead and talk about the first one, which is how to build a dividend portfolio. There's a ton of different ways to do this. There is no necessarily perfect way, but this just kind of give you a overall glimpse of how you should be aiming to do this and kind of what I'm doing. But remember, I'm not a financial advisor and things like that. But truly set a target for consistent additions of capital to your portfolio and like consistently adding money to your portfolio as long as you physically can, if you financially are able to do that. So for example, let's say $500 a month, Next up is don't be a yield chaser. Be certain that the companies you invest in have safe and reliable dividends, not just a high yield, because one thing's turned to another and then you're just holding a ton of 10% dividend yield stocks that, after a year, all these high yield stocks have cut their dividends. They've all fallen in value because they're just using all their money to pay that dividend. And next thing you know, your 10% yield is turned into 2% and all your stocks have fallen down. So things like that, don't just chase yield. Invest in companies with a bright future. You want to have these companies not just paying a good dividend that they grow, but capital gains and providing other value to shareholders is also very, very important. Invest in what you know and what you understand. So invest in companies where you understand everything about them, so it's not a huge gamble. Maybe you understand banking very well, so invest in some banking stocks that you really see a lot of upside potential. Don't go invest in some crazy tech stock company or whatever it is that you just don't understand because you feel like it could do well because you're reading news articles about other analysts saying it's going to do well. Do your own research and invest. It's your money, it's not theirs. Invest your money where it'll work best. And then next up, do very solid research, very thorough research on your investments and stay up to date with your holdings. It's just very important to do that. Take time researching your investments, whether that's days or weeks. And then also keep up with the news to kind of ensure your investments are going as planned. Maybe you bought a stock And next thing you know, 2 months later, they announce they're cutting their dividend because XYZ reason, and you're not a fan of it, but you didn't keep up with the news. And next thing you know, you bought a stock that had a 3% dividend yield. Now it has a 2% dividend yield, and the stock is falling because that's obviously not a good sign when a company is cutting their dividend. So let's talk about this. Dividend stocks and their historical performance. As I said earlier, they have historically kind of shown to provide greater returns in the long term compared to non-dividend stocks or growth stocks per se. These dividend paying companies are usually well established, and they kind of do have that ability to consistently provide real value to their shareholders, which is what you want in a company that you're invested in. So it might be a little bit hard to see this, but what we're seeing is that like the kind of quintile 4 of dividend paying stocks, they kind of pay a good yield with a good payout ratio, perform the best. Quintile 5, the highest payers of dividends, pay the second best, and then quintile 3 and 2 perform pretty much the same and things like that, but the lowest payers perform the second to worst, and the non-payers did perform the worst. And then we kind of look at the return of the S&P 500 index by their dividend policy. Dividend growers and initiators performed far the best. Dividend payers performed the second best. S&P 500 as a whole kind of performed the third. And then we can see no change. Dividend non-payers and cutters and eliminators all performed the worst. But we go to a hedge against bear markets and how dividend stock can help you in this. So when markets are falling, you're going to be making that dividend income as long as the companies you are invested in are financially sound enough to continue paying that dividend. And these stocks also, they just are a hedge against inflation. And when these markets are falling, like I said, that income does give you some sort of return in the market to hedge against all this downward momentum. So kind of here's another thing. Total return in the S&P 500 was negative for the 2000s, but dividends provided a 1.8% annualized return over the decade. So while everybody was just losing money, in the 2000s because of first up the tech wreck or 2008 financial crisis, things like that, if you were buying dividends, they provided a 1.8% annualized return over that decade. So that's another thing to keep in mind. But then we got the dividend snowball effect, DRIP, dividend reinvestment plan. Dividend investing, it provides you with cash flow, and that is very important. That's kind of like the only real way you make money in the financial world is cash flow. You can say this, that, but until the cash flow is in, you're kind of sitting on nothing. So as you take this income and you slowly use it to reinvest, you will slowly increase your income by reinvesting those dividends and then getting paid more dividends the next time. So it's literally you using somebody else's money, this company's money that they're paying you in dividends to make you more money from their money. It's kind of like a cheat code, and the more and more you reinvest into your portfolio, the more you reinvest your dividends, the more you can make. Even though it's a slow process, it is very worthwhile. So here's kind of something to think about. From 1960 to 2020, a 60-year time period, the S&P 500 total return with reinvesting dividends was over $3.8 million. And with the price only and no dividends, it was only $627,000. So that's kind of the difference. 84% of the total return of the S&P 500 index back to 1970 can be attributed to reinvested dividends and the power of compounding. That's a very big difference. So keep that in mind, okay? That kind of just shows how powerful dividends are. And then consistent cash flow. This is very, very important. This is the last slide we're going to go over, but dividends provide you with cash flow, which is true value. Like I said, don't mistake me for loving growth stocks and capital gains. It's just that these returns have to be realized and can be lost before you know it. For me, example, I got really lucky. I bought a ton of NEO stock in 2020, 2019. I think it was 2020. And it went up to $65 a share. I got in 13. And I sold some of those shares. I locked in some profits, but I didn't lock in all my profits. And now NEO is less than my average cost, because as it was going up, I was buying more. But that's kind of something to keep in mind. Capital gains can be lost just like that before you know it. So keep that in mind. But here's something that was pretty important that I looked at as well. There are generally 2 ways to become financially independent. The first commonly accepted idea, have enough liquid assets that you won't spend in your lifetime. Basically just having enough cash to survive, and hopefully you don't burn out by spending too much too quickly. And the second, which is a much better idea, is to have more passive income than your expenses. Have positive cash flow in your life that could sustain indefinitely. So pretty much what it's saying is if you can do this with dividends, let's say, for example, I'm just going to use easy numbers. You live off of $3,000 a month, but your dividend income is $5,000 a month, you have positive cash flow. You got to conclude taxes and things like that to that, but cash flow is king, okay? It's a very specific kind of income that can set you free, and it's what dividends can provide you with. But everybody, that is going to wrap it up for this video. So if you did enjoy this video, make sure to subscribe to the channel and turn on post notifications so you don't miss out on any of my future content. Check out the Patreon link in the description down below. Get access to all this good stuff, crazy stuff you can get. Dividend calendars, income. There's so many more spreadsheets, like 8, 9 more. I'm still making more. Working on making some Excel spreadsheets as well, if you like Excel more. But thank you again so much. Check out M1 Finance as well to get some free money using the link in the description down below. And I will see you in the next video.